Hi, my name is Vinh Tran. I'm a mortgage banker with First Integrity Mortgage. This little video that I'm doing is focused on the do's and don'ts of credit. Most people, when they go into shopping for a mortgage, very fixated on interest rates and fees. But really, this is the piece that is most important in any transaction. Ask anybody who's had a lot of brain damage going through a process, and they'll tell you that this, above everything else, an interest rate is what's important. I want to introduce you to Michelle. She's an underwriter here, been with the company for 20 plus years, very experienced, and very important part of the process, honestly. As you go through a loan, there is not a more important person in this process than an underwriter. As we go through this process, I won't be able to cover every unique situation that is to you, but if it doesn't happen in this video, please call me, email me, and we can certainly discuss those unique situations to you. But the most important thing to know in this process, and this seems like it's one of those things that is a no-brainer, but paying your bills on time during the process is really important. And not only that, in your bank statements, do not have NSF will be just as important through this process.
That's true. It does seem simple, but any late payments on your credit report are going to negatively impact your credit score and the overall decision by the underwriters.
A couple things I see normally in this process that people, right before going to get a mortgage, goes out and in a hurry tries to close down some credit cards because they want to pay it off. They may want to consolidate some of the loans, some of the credit card debts that they may have. And really, they're going about it in a way that may not make sense in their situation. Again, very important for us to have a conversation before any of that takes place.
Right, because you think that lowering your monthly debt is going to help you with getting your mortgage loan. But what happens as a result of that is you have closed down credit lines that have a good established credit history that's helping your credit score. When those are closed and you open a new one, you have a new credit inquiry, which affects your score in a negative way. And then you also have a new account that doesn't have a history. So you're not getting the benefit of the credit score in that situation. Also, when you consolidate your credit, usually your balance is close to your high credit limit. And when that happens, it also negatively affects your score.
Absolutely. Another piece of preparing for a mortgage is, particularly if you know that you have judgments and collections in the past. And those are things that we'll have to work through and understand the guidelines that pertain to your situation and really how to navigate that. And this is, again, comes back to what I've said in the beginning is, we need to have a conversation through this process, and this is something that we can navigate together. And then also having an underwriter being part of this process is very important.
Right, and understanding that judgments and collections do negatively impact your credit. When it comes to judgments, those have to be satisfied. So you'll have to get those paid and get a satisfaction letter, and that actually has to be recorded with the courthouse to release that judgment. When it comes to collections, those are looked at more on a case-by-case basis, depending on the amount of the collection and whether it's medical versus other.
Along being a mortgage banker, I also serve as a Missouri-approved continuing ed instructor for a St. Louis Association of Realtors. A lot of words. Simply put, I teach credit to realtors in the St. Louis market. And the things that in review of what we've covered that's important in this process, as we go through this mortgage process, please call me with any questions. Continue paying on time. And then whatever you do not open a new account to buy the furniture or appliances that you don't need until you actually close on your home, because it will create issues for us to be able to close the loan.
Right, as an underwriter, I'm going to be looking at your loan application as it was presented at the time that you took your loan application. So if those debts change during the process, if you've added additional balances to your existing card, so your payments have gone up, or if you've opened new accounts, then that changes your debt to income ratios and can affect and delay your loan approval and closing. I know we went over a lot in this video. There's a lot of questions that you may still have. If you do have questions, just get in touch with Vin and he can help you.
Thanks, Michelle. And also, I'd be happy to provide you a PowerPoint slide of the do's and don'ts during this process so that you can review it. Again, I'm available by cell or email. I look forward to speaking to you and see how I can help in this process.